Let's move our attention to US data points to keep an eye on. I'm guessing it just says 7 o'clock.
Well,
we found 3 things today.
Yeah, there are a couple of bits to talk about prior to that. We've got weekly jobless claims. I mean, none of this is going to make any difference to what happens tonight. I'm sure the Fed governor's already decided what they're doing. But the forecast is for 275,000 new claims this week,
bang in line
with the previous week's read. However, it must be said the last couple of weeks we've had a slightly deviant figures, so perhaps we'll see something different to the 275 number. And then we have the Philly Fed survey for September, and we just look here at the general conditions index, part of that survey. The forecast is for 6.3 read against a prior read of 8.3, so a slight dip in economic sentiment and outlook is what we're expecting to see here. Obviously it'd be more positive if we got a higher read, equal to or above last month's number, but that's not the expectation. And then the sort of major event of the week, if not the year really, as far as the markets are concerned, the FOMC meeting, decision on interest rates, that comes at 7 p.m. with, I believe, the press conference at 7:30 London time. We don't think that they'll raise rates.
We being you or your house?
Well, I mean, it is me, but it is also the view amongst the sort of 4 or 5 of my colleagues in the analytics department. We discuss it quite regularly, as you might imagine, and our thinking is no, not yet, maybe by the end of the year, and possibly the early part of 2016. As we said before we came on air, it's for the Fed to prove us wrong, of course.
Yeah.